In this video, we are going to talk about T accounts in accounting. Indeed, in this playlist of YouTube, which is about financial accounting, we have already published 2 videos that explained rules of debits and credits in accounting through T accounts. Therefore, now in this video, we make it clear why and when do we use T accounts in accounting. T accounts are not used in practice in accounting, which means when you are going to become an accountant in the future, you are not going to draw T accounts to record transactions or to record financial events. Instead, you are going to use the likes of general journals or journal entries, which are usually adapted in nowadays financial accounting softwares. Okay, if T accounts are not used in practice in accounting, why do we use them in teaching accounting then? Well, to teach double entries in accounting and recording transactions, respectively to learn double entries in accounting and recording transactions, you have to use T accounts. So make sure you learn and exercise recording transactions, the likes of debits and credits through T accounts until you understand them properly. Okay, now let us exercise T accounts with some basic transactions. Before we start with the transactions and also with the beginning cash balance, which is 100,000 euros, let us briefly repeat the rules of debits and credits, which are on the right side of this example, as we see. Assets are increased on the debit side and decreased on the credit side, all the assets. Liabilities are decreased on the debit side and increased on the credit side. Equity is decreased on the debit side and increased on the credit side. Incomes are usually recorded on the credit side and the expenses are usually recorded on the debit side. Let's go on now with the example. In the example, we see that our beginning cash balance or bank is 100,000 euros. So we put 100,000 euros to cash or bank as a beginning balance. Let's go on with transaction 1. In transaction 1, it says we bought some goods for 40,000 euros. 15,000 euros were paid in cash. The other 25,000 euros are going to be paid later. So goods are assets. As we see the rule here, assets are increased on the debit side and decreased on the credit side. So when we buy goods, of course we have more goods now than we had before. So in the first transaction we have to increase goods for 40,000 euros. So we debit goods. We debit the account of goods. The transaction also says that only 15,000 euros were paid in cash. So in transaction 1, we decrease cash, we credit cash for 15,000 euros. And the other 25,000 euros are going to be paid later. So we have a liability for this figure, this sum, this 25,000 euros. This kind of liability is known as account payable. So in transaction 1 we have also account payable 25,000 euros. We credit account payable because the rule here says account payable is liability And the rule for liabilities says that liabilities are increased on the credit side and decreased on the debit side. So when we have more liability than we had before, we have to credit liability. In this case, we credited liability for 25,000 euros. Let's go on with transaction 2. In transaction 2, it says we received the bill for rent expenses for 3,000 euros. 2,000 euros were paid instantly. The other 1,000 euros are going to be paid the next period. So, according to the accrual principle, expenses are recorded in the time period in which they occur, regardless of when do we pay cash. So we record expenses for 3,000 euros, even though we paid only 2,000 euros in cash. So in transaction 2, we have rent expenses for 3,000 euros. Okay, we go to the account of expenses here. As we see, expenses are usually recorded on the debit side. So we recorded in transaction 2 rent expenses for 3,000 euros on the debit side. Then the transaction says that 2,000 euros were paid instantly. So we record 2,000 euros in transaction 2 on the credit side of cash or bank. The other 1,000 euros is a liability. This kind of liability is called rent payable. So we go to the rule of liabilities. The rule says that liabilities are increased on the credit side and decreased on the debit side. So we have to credit liability for 1,000 euros. Okay. Let's go on with transaction 3. In transaction 3, we paid 25,000 euros in cash for the goods we bought in transaction 1. So transaction 3 is related to transaction 1. In transaction 1, we didn't pay 25,000 euros. The agreement was to pay them later. So now we are paying it. Now we have to reduce liability. In this case, to reduce account payable for 25,000 euros. Okay, let's go and explain it with the rules. So liabilities, as we see here, are decreased on the debit side and increased on the credit side. So since liabilities in these transactions are decreased, we have to debit liability for 25,000 euros. Now we don't have any liability. The closing balance of liabilities is 0 at the moment. In transaction 3, we have to credit cash for 25,000 euros. Of course, all assets are decreased on the credit side. In this case, cash is decreased for 25,000 euros on the credit side. Let's go on with transaction 4. In transaction 4, it says we sold some goods for 30,000 euros. Their cost was 20,000 euros. We received 28,000 euros in cash. The other 2,000 euros are going to be received the next period. So in this transaction, we have to recognize incomes for 30,000 euros, even though we received only 28,000 euros because of the accrual principle, which says Incomes are recognized and recorded in the time period in which they occur, regardless of when do we receive cash. So we record the sales in transaction 4 for 30,000 euros. 28,000 euros were received. Okay, transaction 4. Cash is debited for 28,000 euros, and the other 2,000 euros are going to be received the next period. So this is for us account receivable. Transaction 4, account receivable are debited for 2,000 euros. Account receivable is an asset, so the rule is as all the assets. And then we have to record also cost of sales in this transaction. Cost of sales, the transaction says that are 20,000 euros. So we debit cost of sales for 20,000 euros. Cost of sales are expenses. Expenses are usually recorded on the debit side. And we have to decrease goods. We have to decrease goods in transaction for 20,000 euros. So we have to credit goods for 20,000 euros. Okay, and in the end we have transaction 5, which says we bought some goods for 40,000 euros. These goods are going to be paid the next period. So in transaction 5, goods are increased for 40,000 euros. So we have to debit goods for 40,000 euros. And since we didn't pay for these goods, this is for us a liability. So this kind of liability for the goods we bought but we didn't pay is called account payable. So in transaction 5 we have to increase, respectively to credit liabilities, in this example account payable, for 40,000 euros. So this is all for today, guys. Till the next video.